Welcome back to the Build Boldly podcast. I'm your host, Pat Rodgers, and today we are joined by Anna Dey. And Anna Dey is CEO and founder of Franspot, who focuses on helping businesses with potential franchise options. She's also a multi-time, multi-brand, multi-location franchisee. So she has a number of experiences and a lot of operating knowledge that we're going to lean on today and learn more about in terms of how these franchisees operate and what they can do. So Anna, thank you so much for joining us today.
Pat, thanks for having me. I appreciate it.
Awesome. Well, let's start with Franspot. So tell us what Franspot is and how you support operators, entrepreneurs, potential business owners in terms of this lane and what they can do there.
Yeah, it's a great question because frankly, I think franchise consulting is very confusing. Even candidates that I'm actively working with, they're like, wait, what exactly do you do? As we get started. So appreciate the question. So the professional answer is I help people that are considering investing in franchising. Sometimes they're considering investing in business ownership overall, and franchising is just one piece of what they're considering. But if they're open to evaluating what franchising might look like for an entrepreneurial venture, I help them understand what the franchise business model looks like. And then I learn about them. So I learn about their goals, their background, their interests, heavy focus on net worth, on risk tolerance, on budget, on geographical region of preference. Where do they want to open a business? What's available and viable in that market? So it's it's a lot of getting to know who I'm working with. And then I represent hundreds of franchise brands as a franchise consultant. So it's kind of a matchmaking process at the beginning. And then it's a lot of supporting them through the evaluation of brands they're considering. I've been a franchisee in 6 systems, which I always joke is psychotic. It's a little over diversification, but I've been there, done that. It's been my life's work. I've been doing it since I got started very, very young, and I just kind of got addicted. So I also get to help support them understand the process. Like, what am I missing? Am I doing this right? What should I be asking that I'm not? And so I get to be a third-party advocate for my candidates throughout their diligence process as a consultant. So it's fun.
Awesome. Well, that's a really good kind of opening into this world. And we before we jumped on, we joked because I even screw this up. We have franchisors and we
Yep.
have franchisees. So can you help the audience kind of understand that relationship and how those two kind of interwork in terms of the support and options and things like that we have on both sides of the table?
You got it. Yeah. So a franchisor is quote unquote the parent company. It starts with an independent business owner who creates a business that they believe is scalable. They believe that this is a model that can work not just in the market where they opened, but nationally or globally, right? And so typically that business owner will build out a second, a third, a fourth location or territory. And once they have unit economics that indicate that they're right, that it is in fact, copy and pastable, if you will, they've proven it out in multiple markets, then they can become a franchise. And so they say, hey, Pat, I have this business model. I've figured it out, right? I have processes, I have procedures, I have branding, I have vendor partnerships, I have negotiated rates, I have basically a business opportunity that you can just plug and play into in your market and execute. I will be your support system as you execute said business plan. And then there is a royalty relationship there, right? So you're going to give me a percent of your revenue. And in return, I figured it all out for you. And I'm going to continue focusing on research and development, continue negotiating vendor contracts to ensure that you have the best ability to be successful. The two parties work in tandem because a franchisor cannot exist without successful franchisees. And successful franchisees are supported by their franchisor. So I've only been a franchisee. I like to execute someone else's genius. But some people are more on the other side where they want to create something and then have a system of their own franchisees across the country.
Awesome. Great explanation. I think a great overview. And so you mentioned the kind of framework or the model that they've defined and the processes and things of that nature. And I'm sure there's
Yeah.
endless scenarios of what that support ultimately looks like, franchise group to different franchise group. But what are some of the things that do come with that are kind of pretty much standard across franchising operations that can give a business owner that confidence of the support that they're actually going to get in running this business?
Yeah, that's a great question. There are definitely things that undoubtedly a franchisor should be able to show and prove. So, a couple things that come to mind. What does their technology stack look like? What is their, are they focused on research and development for their franchisees to ensure that franchisees stay relevant? I always use an example as a Smoothie King franchisee. When I bought in, I loved that all they offered was smoothies because I already had restaurants and I didn't want food. I was like, oh, I love the simplicity of just smoothies. And then they tell us, "Hey, we're adding food." And I'm like, "Oh, dang it all. That is not why I saw." I'm like, "No, we don't want food, right?" And then they were able to present to us that they had done R&D and they had indicated that other QSR brands, quick service food brands, had increased their tickets significantly, upwards of 30% when they expanded the food category because they didn't need to get 30% more customers. They just needed 3 out of 10 of their existing customers to not only get their coffee. I think that was one of the brands, a big coffee player, but also add the food, right? The food items. So
Sure.
it was a no brainer. The goal was to over a certain duration increase our top line revenue 30% without increasing a single customer in the door, and so made a lot of sense. I was only begrudgingly, mad for a while there, and then I recognized, okay, there is some brilliance here, and frankly, that's R&D that I would not have done if I was just an
Sure.
independent smoothie owner. I would have been
Right.
selling just smoothies forever and ever, amen. And I'm grateful for the franchisors that are saying, "Hey, what are we doing to make sure our average unit volumes are growing? What are we doing to make sure our franchisees are staying relevant?" And that's part of the job of your franchisor. So tech, R&D, marketing strategy, and ever evolving marketing strategy, right? Staying aware of, what worked yesterday might not work tomorrow. And while we are heads down in our businesses as franchisees, we have an expectation that our franchisors are keeping us relevant, and
Right.
every month, quarter, year, they're saying, "Hey, here's what's coming down the pipeline and here's why we're implementing it." We trialed
Yeah.
it in 10 locations, et cetera. So all the things where, you get to inherit the hard work of your franchisor that's working on your behalf to make sure that you're still revenue and profit generating year after year.
That's great. And it's interesting because there is that royalty component that you mentioned. So you are aligned in a positive way of they want to continue to increase the amount of royalties they're generating. So they're going to put in the
Right.
work behind the scenes to do that. That in other cases, if you were an independent operator, like you mentioned, do you have that hire that's doing R&D? Do you have that marketing person that's doing research? Do you have those consultants? And so there is value in the royalties and some of the things that you're paying because that's not headcount, that's not operational overhead that you have to take on, that you can actually share across all these brands, and that gives you another lift as well.
Totally. And we see a lot of, when people think franchising, they think a lot of brick and mortar, like what I've done, Anytime Fitness, Smoothie King. But there's some huge players in service franchising, like think of Molly Maid,
Yep.
Mr. Roto Rooter, some of these big brands that we all know, Paul Davis Restoration. And, the franchisor supports the national call center for majorities of service franchises. So right there alone, you're paying what, a 7% royalty on your top line revenue, but every lead that gets generated through all digital marketing and other, marketing efforts is first fielded by an intake individual that's not on your payroll,
Right.
that's going to handle that lead and get that warm or hot lead to you after taking that initial intake. That alone, right? That
Yeah.
alone, not to mention all the other things. So, I mean, I'm pretty biased and I always admit my bias when I work with people.
Sure.
Franchising has done so right by me and I'm just very proud of the franchise brands that I've been a part of. And so I always jokingly say, "Hey, talk to some other people that maybe don't like franchising or that maybe, prefer independent business ownership." But for me, I love that I can it's like instead of being at the start line building out a business and the years it takes to figure out what is my strategy, what are my, who am I outsourcing X, Y, and Z to? What am I bringing in-house? What's my differentiators? What's my price
Right.
point? Everything, right? I cut all of that and just go to the finish line, and that's what franchising is. It's plug me in at the finish line, and just
Yep.
tell me how to execute in my market. And so,
Let me run.
yeah,
Yeah.
let
Awesome.
me run.
Well, I'm glad that we kind of set the foundation because I think that's an important component for everyone to really understand and see those different variations of what you can do with a franchise group. So now I want to kind of take a step back and talk about operators in general. And,
Yeah.
one of this will kind of be we're building. This is some foreshadowing because I think Anna has an incredible strategy that we're going to get into. But ultimately, today's world of finding customers and the rat race to continuously find new customers and all of those pieces that is evolving and that is changing. So how do you see that kind of for an operator always finding new versus trying to, build those relationships? How do you look at that in today's world of lead generation and client acquisition?
Yeah, it certainly is ever evolving, and there are a lot of tools and resources, and it obviously can be a little bit specific to the industry. But one of the things that that I have done when I joked earlier that I was psychotic for having so many different diversification businesses, but it's something I talk to my candidates about, which is that like build the relationship once, earn their dollars twice, or three times, or four times, and so in entrepreneurship, what is the common strategy is to when you grow your business, you grow geographically, right? So, okay, I have a franchise in, two on the east side of Cleveland. I'm going to build two on the south side of Cleveland, two on the west side of Cleveland. I'm going to continue growing with that same business model. Or of course, building more revenue streams within your business, i.e., the addition of food. But the in this example of growing geographically, I consider that growing, in depth, your roster in depth. So I have one brand and I have 10 units or 15 units.
Yeah.
Every market you go into, you're starting from square one from a standpoint of client acquisition, right? So they don't know you yet. The community doesn't know you yet. And you got to work to build those relationships. So I I got a little bit for me, I really enjoyed diversifying within one market. So I had
Hmm.
an Anytime Fitness, a Smoothie King, a Clean Eats, and I have a franchise called Go Glow, which is a beauty franchise. I had those four franchises within 8 minutes of each other. And I had a bar at one
Right.
point. So, and so I would build the relationship once. I would hopefully earn Pat's trust. He would come to my business and get used to the level of service that he would expect from me as an operator. And then I would open, the Smoothie King down the street from the gym. And he'd be like, oh, yeah, that's my gym owner who owns that place. She runs a great business, and patronize me there. And so
Right.
this is that width strategy. So instead of trying to have new client acquisition constantly through more units, what if you diversify in the same market or markets um, to build the relationship once and earn their dollars twice, right? And so, or three,
Right.
four, five times,
Yeah.
which, and I always admit, both strategies have their pros and cons. I'm not, but when it to your point about the challenges of client acquisition and getting people to switch to you and spend their dollars with you as a business owner, certainly it looks different in consulting than it looks in, smoothies or gym
Sure.
memberships. They all have their own unique pros and cons in that regard. But that's one strategy that has worked well, which is diversify within the market where you have a brand presence, and consider generating more revenue in that capacity.
That's great, and I think that that's so interesting because I think, when the same idea of adding that food line to Smoothie King is I'm increasing the dollars that I'm generating from the same customers, the same people walking the door, and in some cases, I only need 3 out of those customers, to actually buy this, and I'm gonna increase my margins by X, and so it's kind of the same principle, but we're looking at new lines of business, and so I think one of the things
Totally.
that's interesting about your, overall strategy and thesis as we look at, for instance, home services and things of that nature,
Totally.
these individuals would have an opportunity to, I'm already offering restoration. What would be a parallel lane that I could offer? And so, how do you kind of think about that in terms of what are some good matches, some good things that people could be thinking about if they already have XYZ business? How can they expand quickly to capture that same customer in a new lane?
Totally. It's a perfect analogy, and it's even easier in service lanes because you don't have to do the real estate search and sign a lease and do permitting and get a contractor out there. The brick and mortar lane, it's going to take time to really get
Right.
that diversification going. I'm going to use a real candidate that I've worked with, and I'll have to send him this podcast link after the fact. But one of my buddies, he's owned a franchise called Deck Rescue for a decade. He's been staining our fence, and he stains our deck and fence at our personal home and at some of our businesses. And he and I were talking, and he's like, "Yeah, business is great, but it's seasonal. You know,
Sure.
I have to do 100% of my revenue in like 5.5 months of the Northeast Ohio year because it's pretty cold up here.
Right.
And so he's like, I would love to not lay off my guys. I would love to be able to keep at least a handful of my guys. And so we're like, well, let's look at that. Like, let's see what makes sense. First of all, you have a decade of clients, right? That trust you, that like you, that know you. Oh yeah, these guys come out every year and stain my fence or my deck or every other year. So money can't buy that. That's people who know and trust you that already work with you. So anyways, we ended up looking at a lot of different things, and he opened a franchise called Bloom and Blinds. It is a interior window coverings franchise. So all things, replacing blinds in interior and some exterior, but primarily interior, which removes the seasonality.
Yep.
So, anyways, it was a great fit. He's already done my blinds at my restaurant and my home. So, and my mother-in-law's home. So one thing about
Yep.
me, if I help you get into a business and you live in my community, I'm spending my dollars with you for sure. But it's been a great fit for him. And so now he has the opportunity as he rolls into that off season to kind of move his staining guys into some installation jobs, interior, and again leaning into that existing client base. So a perfect example of what you're referencing, and a way for him to grow his top line revenue cumulatively as a business owner, without having to build his Deck Rescue brand in a new community where he has no footprint and no relationships.
That's excellent. And I think that that is spot on with kind of that overall expansion, leverage those customers, have those relationships and go from there. And so within that world of, opening another franchise and being a franchisee in multiple lanes, are there any challenges with that? Do any of the brands have challenges
Yes.
with that? And how does that kind of work when you're thinking about which ones I can or maybe shouldn't, pursue? And I'm sure that's one of the reasons that we come to Anna is, hey, here are those conflicts. But how does that work in terms of somebody kind of thinking through that process to make sure that they don't end up in a, challenging situation with the franchisor?
Yeah, I think it's so fair. And we were talking earlier about, like, there's serious pros to the depth strategy, and then there's those pros to the width strategy.
Right.
The pros to the depth strategy is one franchisor, right? So if food is getting added, you're going to have the same playbook for how you're going to roll that out in your 10 locations, right? You're going to
Sure.
have probably all your leaders set in stores on a Teams call, probably going to make them all drive to one location where you talk through it and blah blah blah, right? So I think of it as that, like the pyramid, like it
Yeah.
flows down. When you have, three brands, that's three little pyramids. So
Hmm.
it definitely has its challenges. Every franchisor is, they're not an employer because frankly they work for you, not the other way around, but they are all going to have initiatives that come down the pipeline. They're all going to want to tell you about the new loyalty provider, or, oh, hey, you got to be on a call to meet our new marketing agency and get onboarded. And, there's just going to be obligations that you have. And so take that times two, times three, times four.
Sure.
That's why I make the joke about me being psychotic, because it becomes overwhelming, right? So I always tell my candidates, like, hey, I love diversificate. I love the diversification game plan. And there's other pros to it. Like, you just never know when consumer trends might trend away from one industry, but your other industry thrives. That has happened to
Yep.
me. That is, it's so, um, but yeah, you have to be diligent about it. You have to make sure you have the bandwidth. I just thought of another candidate I'm working up with in Minneapolis. He has an irrigation franchise and a franchise called Lawn Doctor. And he's like, okay, same thing. Those are both seasonal. And he's looking to get into a third one, but he's being very careful about, you know, which brands his labor field could also, manage, and, how he can create an infrastructure where he can handle that third brand and that third, investment. So it could be a lot, and so that's why I say 2 to 3 is lovely. More than that, you
Sure.
start to, have no life, but it's a careful
Right.
balance.
Yeah. Well, and so the other question that I kind of had on this is, we mentioned some of the technology stack and some of the things that come with, being a part of these groups. And so is there benefit, in there's the neighborlies of the world that have,
Yeah.
40 brands underneath. You've got, some of these newer groups emerging that are in a similar lane of we've got multiple brands under an umbrella. Is that a path that allows for a little more consistency maybe in terms of what we're using across businesses and in those umbrella companies, do they allow for multiple brand franchisees and how does that kind of track? 'Cause there's kind of two parts to this, but I'll start there in terms of does it make sense to look under the same umbrella in order to at least mitigate some of those challenges you may have of changing technologies and strategies and all of those components?
Yeah, it certainly does, right? So you're exactly right. There's a lot of, and that's why a lot of service brands have that parent company that will, and a lot of times those parent companies are actively acquiring. They're not necessarily building
Sure.
all the brands from scratch. They're saying, hey, we have a hole in our portfolio. We have a brand that does X, Y, and Z, but we don't have a good service brand that does this. And so they'll go look for a brand to acquire, whether that brand is already franchising or whether it's an independent business that maybe they've got 10, 15 territories operating and they go, hey, we'd love to acquire you. And then they franchise them. But to your point, while it's not always exact, meaning there might be some brands, for example, in the neighborly portfolio that use, this tech or this market and some that don't.
Sure.
So it's not always 100% copy paste, but undoubtedly it is easier to diversify within one parent company. Typically that's one annual conference. That's, they're going to
Sure.
usually, they're going to, they're going to use there. And sometimes there's franchise license fee discounts for existing franchise partners. And another big thing is with those umbrella organizations is the client sharing, right? So in theory, the Molly Maid franchisee, which is under the Neighborly Brands umbrella, might, when somebody says that they're looking for a home organization system, they might refer their client to the Shelf Genie franchisee, which is another Neighborly brand in home organizational systems, right? So, yeah, there's a lot to that, and there's premium service brands, there's home front service brands, there's Neighborly brands, there's Eversmith brands. There's a lot of different service parent companies that have built out an infrastructure. Brands Horsepower is another big
Yeah.
one. For that exact reason. And it's, and one thing I work with my candidates on is not all the brands in their portfolio are created equal. They usually all
Yeah.
have some winners. They have some that are, just getting started. So just because they're under the same parent company, we don't always treat every brand like, we don't look at it through the same lens. But when it's time to diversify, would I recommend a candidate start within their own portfolio when applicable? Absolutely.
Yeah, makes sense. And the other interesting one, I'm curious if you've had any, clients that have fallen into this bucket is we come back to I'm an operator, I built this business, from the ground up, this is mine, and I have, X number of customers, a decade in business, but it's not inside of a franchise operation. It's my own business.
Yeah.
But I could very easily open up a franchise and expand in that lane and then potentially create synergies because I'll just take whatever tech I'm using in that lane and apply it to my existing business. And so do those scenarios happen because it seems like, hey, I put all this work in. Do I expand to another geography and have that challenge you mentioned? Or do I go with the with approach and I could start tomorrow with a new line of business? Does that happen? And have you seen that with some customers?
That does happen. However, when I'm working with someone that is an independent business owner, they're so skeptical of
Sure.
franchising. It's just so funny. Like you could almost draw a line in the sand. Like as soon as someone tells me that they have owned their own business or they own their own business and they're looking, I know that we're going to have an uphill battle getting them to wrap their brains around paying royalties and having a
Sure.
franchisor. And sometimes they get it. And sometimes they're like, oh man, I've had to figure this all out myself. This actually sounds great. Like I don't have to
Yeah.
make any decisions. But other times they really push back. And so people who have made their wealth in franchising, they get it. They love it. They easy diversification. They're like, yeah, yeah, yeah. People who have made their wealth and, with their own independent business, much more skeptical. So some
Yeah.
of them, some of them take the jump and get into a franchise. And to your point, that's a really interesting thing about they might learn things that they can apply in their independent
Right.
business. I haven't thought about it through that lens, but I bet that's very true. They're like, oh, this system's great. I'll go ahead and implement that over here too. As long as the system is third party, they can,
Right.
build out their own relationship over here. But yeah, that's definitely a little bit of more of an uphill battle. Getting people to wrap their brains around the franchise infrastructure. And they're like, well, maybe I
Yeah.
can just do it myself again. I did it once, why?
Right.
And I'm always transparent. Like, maybe franchising isn't no, it's not maybe. It certainly isn't for everyone. There's plenty of people that are a better fit doing it themselves and don't need, especially if they really get tech and they really feel comfortable negotiating contracts for software and loyalty providers and negotiating their payment processing rates, and they want to develop their own website and branding and pricing structure and do that research. And some people are called to that,
Yeah.
and many of us, myself included, are not.
Right.
So it's kind of about self-evaluation too.
Right, because there is a little bit of that, if you're in a franchise system, you kinda still have a boss, and so there is that friction of, am I somebody that really shouldn't have a boss at this point in my career, or am I somebody open to some guardrails and some, sometimes restrictions, but also a lot of benefits, obviously, but is that probably another component that somebody should self-evaluate? Am I somebody that could have a quasi boss at this point in my career?
Yeah, and while I wouldn't use the language boss,
Yeah.
I do agree with your sentiment. And a good way. Usually, I get some little red flags on that when I'm working with a candidate, talking to them about what they want. They'll start saying, "Well, can I? If I want, like, I'll just for the sake of it use like a Smoothie King example. They'll be like, well, what if I want to?" Add my own smoothies to the menu because I make this one at home that I really like and I think it would sell really well. Or, what if I want to? And it's like, no, like
Nope.
it especially the more mature the franchisor too, the more rigid, right? So
Right.
like I promise you this, Smoothie King is not letting me add the Anna's favorite smoothie to the menu, right? Like now if a candidate is expressing that they want to have a lot of influence on the franchisor, I would recommend a newer franchise
Sure.
system, a little bit more in the new to emerging space, because that's when frankly the earliest adopters do have the most influence on their franchisor. If you're franchisee number 14, you're going to have influence. You're probably going to have the founder's cell phone number in your phone. If you're
Yeah.
franchisee number 1000, the founder does not know your name.
Yeah.
So it
Right.
can be different. So it's one of the variables I take into consideration. But when I start getting a lot of that, Pat, you're like, oh, well, if I want to open this service franchise that does drain cleaning, but then I want to add, restoration, or I want to add, I really like, I don't know, cleaning. I want
Right.
to add a commercial cleaning division. No.
No.
you know, no. So they're going to want you to execute their playbook. If they have
Yeah.
a simplicity focused playbook, that's what they lean into, right? If they have we like that we have 11 different revenue streams playbook, that's what they lean into. Like
Yeah.
they're all going to have their own game plan, and while they will be open to thoughts, it will be a longer process for implementation. It will probably take a pilot rollout. Like it will not be, oh, tomorrow I'm going to start my new revenue stream because I noticed that I might be able to make money doing X, Y, or Z. So
Yep.
yeah, it's
Absolutely.
usually I get some warning signs.
Yeah, I can only imagine. And the boss is the wrong term, but the I control everything is,
Yep.
the flag for yourself and potentially for Anna of this may not be the best fit. And so I think that's a really good point to make. And so there's, all these different lanes that you can play in and just understand yourself in terms of what this could mean for the business.
Growing a business shouldn't cost you your sanity. One founder told us,
had I not made that decision to go into this space, my business, my personal life, and my sanity, and my family's sanity would have dwindled very quickly.
Rise exists to support real entrepreneurs through real growth by giving you secure, flexible space and the support to scale without burning out. Office, warehouse, and business space, all designed to help you work smarter, not harder. Learn more or book a free space planning call at risecommercialdistrict.com.
And so for you, obviously you had multiple locations, but what was that moment of, you know what, I'd like to go wider versus, deeper. And how did you think through that in terms of kind of coming up with this, really thesis of how do you expand brands and how do you expand through franchising? What was that moment for you, and how did you get to that idea?
Well, it's funny. I've honestly recently shifted. So for 15 years, I was in width mode. So I have been a franchisee with Anytime Fitness, Clean Eats, Smoothie King, the Vitamin Shop. I was a licensee of Barrio Tacos and Tequila, and the Vitamin Shop. Did I say six? If I did, and Go Glow. That was the one I think I
There
missed.
you go.
So, a lot of width. And I also had one independent venture. Um, and I did get to the point where like my bandwidth was, it was like, okay, this isn't working. This is so much. And so I started actively preparing for exits. I love the exit, by the way. I love to build it and I love to sell it. So I like an entrance strategy. I like an exit strategy. I've successfully sold many businesses and had really exciting exits. So I actually recently sold my two Smoothie Kings, which brings me down to two brands. So I've built a portfolio over 15 years and, at different times, over the years, I've sold different units. And then I'm building out two more units of one of the two brands I've retained at this time. So I'm kind of leaning a little bit more into the depth strategy.
Sure.
But width served me very well because I doubled down on the same like Northeast Ohio communities. I think it's also about where you're at in your life and I was fine to be all work all day, every day for a
Yeah.
majority of those last 15 years. Like I don't have kids. This has been it, baby. Like
Yep.
this is my journey and it's been fun. I don't, but I'm getting closer to 40, Pat. And I said, okay, this is getting harder.
Yeah.
And so now I'm like, all right, I think depth is going to make more sense, especially because I have pre-identified leaders that, I've gotten better at delegation. And so,
Sure.
so now I'm kind of shifting into that more depth strategy where I intend. One thing about me, Lord knows what I say today could be different tomorrow, but for better or for worse. But right now, kind of shifting into more of a depth strategy, growing within two brands. But again, and that's why I always say they both have their pros and cons as strategies.
Sure. So you mentioned something earlier about the staff and the leadership within your group. And so it's an interesting point that I think is important for people to understand when we're going with that depth strategy, having those identified leaders versus, full new geography, rehiring, yada, yada, yada. How does that help you? How much easier does it get when you can identify those and then continue to expand that brand?
Totally. It's so much easier. I'm kind of, I can't necessarily always recommend this to others, but I'm kind of crazy about this. Like, I actually typically sign another franchise license when I have a pre identified leader. Like,
Okay.
I will sign businesses because of humans in my infrastructure. And I recognize they could leave me and then I better figure out who the heck's running the business every day.
Sure.
But it has, knock on wood, it has never done me wrong because I've, built some great relationships with the people that have worked for me. So I had one Clean Eats and I had a phenomenal operator who I thought could handle a store. And so I moved her to my first Smoothie King. And then I had another operator in my Clean Eats that was kind of rising up. And so I ended up moving my first manager to my second Smoothie King. And so um, right now I'm building more Clean Eats units because I have incredible leaders, one who's been with me for 9 years and one who's been with me for 5 years. They want more, they're ready, and they've built people underneath them that are ready to kind of move more into their roles. And so I'm moving those two leaders, my store managers, into a regional manager role overseeing multiple locations. And then the people underneath them that have really grown from just like line cooks into true leaders for our team
Yeah.
into management positions. So it's exciting. And I always like, as I'm leading up to signing a new franchise agreement, I'm like, Pat, anything changed? This is your last.
For you?
You
You
sure?
coming?
Yeah, yeah, yeah. If you're feeling antsy, this is the time to speak up. And they're like, no,
Right.
I'm excited. I'm excited. So, it's kind of funny. I give them like a couple months. I'm like checking in again. You feeling
Yep.
motivated?
Right.
So,
Right.
but it's so mutually beneficial because it's an opportunity for me to compensate them more. It's an opportunity for me to help them have career advancement, and frankly, hopefully, an opportunity for me to grow, my portfolio and build wealth for myself too. So I love that part,
Yeah.
and so that can work. That typically is a depth strategy because you
Yeah.
want to keep them within the organization they're really strong in. But the example I gave earlier can also be a width strategy. If it's same skill set. Like my managers
Right.
at a Clean Eats can definitely manage a Smoothie King. And one of my Clean Eats managers, and I think she'd be okay with me saying this, she was a really hardworking manager. She had all the like grit and try in her, but she really just didn't take to food as much. And she was a front of house gal. Like she was really
Yeah.
a customer service gal, and she was really doing a lot of kitchen work. And so she was still a great manager for us. She always showed up, worked hard, but it just wasn't a super skill alignment. And we took kind of a risk on her bringing her in because she did not have food experience. We just knew that
Yeah.
she was, and that's one thing too, Pat. I'll tell you, like I hire for human characteristics, trust,
Hmm.
loyalty, respect. I don't hire for experience. So
Right.
I'll put you in a manager position running a beauty shop if you're a great person, whether so,
Yeah. Yeah.
so anyways, but that was a really cool move for her because Smoothie King is way more customer facing, right? It's a
Yeah.
lot of being on headset, talking to customers. You're almost always front of house. So, that was a really cool pivot for me. But anyways, yeah, so I love developing and growing based on human capital
Yeah.
and humans and I love my people and I like to try to do right by them and get them in good spots and they grow alongside me.
That's awesome. Well, there's two parts that I want to kind of come back to that you mentioned. So one, obviously, we're talking expansion and where you can go with that, and then the second was the exit component. And so when you're inside of a franchise brand, are they bringing new regions to you? Are they, saying, "Hey, we've got this available"? In terms of that, how much is coming to you in terms of, "Hey, here's a new location you could take over," versus you having to kind of raise your hand and say, "Hey, I'm looking to expand." So how does that process work, and what can folks expect if they're saying, "Hey, I have one, I'm thinking
Mhm.
about this next step." What would that look like inside the same brand?
Yeah, so there's really two options. Number 1, purchasing the franchise license of a viable territory that is still available, and number 2, acquisition. So, one thing I love about franchising is there's a bunch of people who run the same damn business as you, right?
Right.
They already know the tools. They already know the back end, software and resources. They already understand the offering, right? So, think about how easy that is to sell and acquire, right?
Yeah.
Like, even if you live in Dallas and I live in Cleveland, we're running the same business. You could put a couple people on an airplane, send them up to Cleveland to onboard new team members because they run that business in Dallas, right? So, whether you are hoping to get in and get out, have a nice, sell for a nice strong multiplier and move on quick, or whether you're looking to grow an empire and you want to be the one that acquires 15, franchises or,
Yeah.
territories, both options are on the table in franchising. So when I sold my Smoothie Kings, I was sitting on 6 years of people telling me, "When you're ready to buy, I'm interested." I
Sure.
y
Okay.
you know, and so and almost all of them were existing franchisees of systems. Majority of them were also existing franchisees of Smoothie King. The
Yep.
franchisee group I ended up selling to is, a multi-unit Jimmy John's and Mr. Hero franchise group. Um, but I got offers. I See, that's the thing I love about franchising. Every time I've sold a franchise, and this is a fact, has been a few emails.
Yeah.
I already, you know what I mean? I know who's acquiring in my franchise system. I know who's acquisition heavy. I know who to call.
Yeah.
So when I think when I've got a couple good years of EBITDA, I've kind of done some pro forma on what I think I can get, and what did I put into it, and the math has to math, right? And if people want to sell too early, I'm like, doesn't make sense. You got to put a couple more years into it. Um, but anyways, when the math starts mathing, I reach out and say, "Hey, I got 2 units, I got 3 units, whatever it is. Here's what I'm looking for. Here's my balance sheets. Here's my cash flow statements. Here's my profit and loss statements. Here's the great staff that you're going to inherit." And one thing when I sell, I either A, make my buyer commit to keeping my people at their existing compensation packages, and I'll write that into the contract, or B, I let the buyer know if my leaders want to come with me, I'm going to let them, but I'm also not
Sure.
going to try to get them to come with me. I'm going to say, "Hey, I want, so I'm always transparent with my buyers about that. But anyway, so yeah, I send a few emails. Sometimes it's texts. I'm like, "Hey, Pat, what's up? Remember me? We talked a few years ago. You
Yeah.
still looking to buy?" You're like, "Maybe. What you got?" And so,
Sure.
that's how I've, sold all my businesses. And, I kind of, it's so funny. I have like a note section of my phone. I'll just remember anybody who over the years is like, "Hey, you ever going to sell?" I'm like, "Not today, but I'll get your name."
Right.
Um,
Right.
and on the flip side, I haven't been an acquisition entrepreneur. That's just not been my lane. I'm not saying I would never do it, but I get nervous about acquiring somebody else's thing. Like, I don't know
Sure.
how you've been running it. I don't know. I don't know what I'm getting at,
Right.
we're creatures of our own life experiences, and that just hasn't been my life experiences. Some people are the opposite. They don't want to build from scratch. They want to buy.
Yep.
So we partner well together, myself and the ones that like to acquire, and I like to build and sell. So yeah, but in franchising, long story short, it is so much easier to buy or sell, regardless of your intent, because there are all these people that obviously are entrepreneurial minded humans because they quite literally are entrepreneurs, and B, already know how to run your business. So what a great,
Right.
what a great amount of buyers that you could reach out to when you're ready to sell.
Yeah, absolutely. Well, and there's just because of that, there's so much liquidity in this market, which is not always true depending on where you're at. The other interesting part is because you are submitting financials to the franchisor, then another franchisor or franchisee, I should say, knowing the lane is like, I can trust these financials, which usually is one of the biggest challenges when we're acquiring an independent business is, can I trust these financials? Are they all
Good
accurate? Do they
point.
actually, do what do I need a discount? Yada, yada, yada. So you've got a lot more transparency there, which is really interesting. And from what I've understood, and I'd love for you to correct me if I'm wrong or elaborate, is that once you're in a system, it's much easier to acquire new territories, acquire existing assets than trying to come in from the outside of a system and do the same thing. Is that a fair statement in terms of how the franchisor looks at things?
It is totally a fair statement. In fact, I tell people because I've worked with some people that want to acquire, like they don't want to open a new franchise. They want to, their take is like, no, I want to day one have existing clients and revenue, right? And
Yep.
I get that. But if a and I want to be careful because I'm sure there's franchise brands on that are good, but that are on these sites, buy, biz, sell, and whatnot. But
Sure.
in my opinion, and I'll just speak from my own experience, in my opinion, a franchise business should never make it to buy, biz, sell. It should
Yep.
never make it to a business broker because if they could not sell within their system and not paying any fees, not paying any, broker fees or,
Yeah.
why did no one in the system buy it? Right?
Right.
That's problematic to me.
Yeah.
Now I'm sure there's some exceptions, but like I said, every franchise I've sold in Anytime Fitness, we sold our Barrio Tacos, we sold our Smoothie Kings, sold my vitamin shop, all of those to another franchisee, right? Never with a business broker, right?
Yeah.
So that is to me is a bit of a red flag. And so, but when you're a franchisee, to your point, you'll be on the inside. And so whether the franchisee that wants to sell tells their franchisor like, hey, mom and dad, I'm looking
Yeah.
to sell. Do you know who in the system is? Or whether the franchisee like me already just knows who's looking to acquire. When I sold my Anytime Fitness, I sent one email. Now, in
Wow.
retrospect, I probably should have sent a few more, just get some bidding going on. But
One or
I
two,
sent one. It was to a group out of Texas that already had over, 6 dozen franchises. They were a huge, heavy player in acquisition. They were like a franchisor underneath the franchisor, right? And so I just sent one email, said, hey guys, I got a strong, profitable, high performing club up here in Northeast Ohio. We've been doing what we're doing for 9 years. That was the only business I've ever owned with my parents. I was the sweat equity operator. That's how I got started so young. They took all the risk. I always say we were, I didn't come from a lot of generational wealth. My parents took a ton of risk. It was super scary.
Yep.
It's the best story though. Worked out great for all parties. My parents got to retire in their 50s and I got to work my ass off in my 20s and build something great. So yeah, when it was time to exit, we kind of knew what we wanted to make on it. Sent one email, made that, they offered what we wanted and we're like, well, all right, that was pretty easy. So yeah, that's something that, being a franchisee, I was able to do and never needed to list my Anytime Fitness anywhere for sale, right? Because
Yeah.
if that group had passed, I would have had another 10 emails I could send before I would have ever gotten to that point. So yeah, if you're in,
Of
you're in.
course.
If you know, you know.
Yeah. Well, that's where, these conferences that you go to, you get to meet these folks over the years and all of these, different ways that they're sharing information. And then you always have, usually a regional manager of the franchisor that you're like, hey, if we're thinking about this, who might be interested? And that's their job. And so you have this really intricate system that allows for both scale and liquidity, which is unheard of in a lot of business lines. So a lot of really positives on that front. So I want to kind of peel it back one more layer in terms of when to know you're ready. So we've kind of talked about two of the scenarios you laid out where it's like, I have a seasonal business and what can I do in that off season? Are there other times where it's like, hey, I have untapped opportunity here that I can get into, and knowing when it's the right time for someone to take that step and take that leap? Do you have any advice for folks on knowing that or identifying, hey, here might be an opportunity that I'm missing?
Yeah, it certainly is individual, but one of the things when I work with candidates, we talk through, so really heavy on understanding their why. Like, I really like to know, are do you actually want to run a business or do you just hate your job? Do you really want
Yeah.
to own a business or did you just read a book that says you should diversify your wealth portfolio and you should have a business in there? Like,
Yep.
do you like for me, and I'll work with anybody, but I'm pretty transparent. I'm a consultant as I quote unquote my fun side gig. It's sort of become a full-time gig. It kind of, snowballed, which has been interesting and fun. But I always tell my candidates, I do this because I like it, and I don't pressure anyone to do something that isn't the right fit. So I'll kind of push back and challenge people if their only why is revolved around, negatives. I hate my
Yeah.
job, so I want to open a business. Or if they're just looking for diversification of wealth because they're they're you can be a semi-absentee owner. Like, I don't work in any of my franchises. I work, full time. Frankly, I only work in my franchises one day every other week. And I don't have to do that. That's by choice because I like to just keep an eye on things. So it's not that it's impossible to run absentee, but it's never passive, right? Like, you still
Right.
need to know your employees. You still need to figure out, you know what I mean? Like, you have to keep an eye on things at the end of the day. So people are just like, oh yeah, I've got money and I've already put too much in the stock market. I've already, got a few rental properties. I want to have a business to diversify. Okay, well, do you actually want to be a business owner, or do you have someone in mind that you plan to have as your sweat equity partner that wants to be a business owner? So that's one thing about timing, is understanding that piece. And then the other thing is just honestly looking at their financials. And I've kind of come up with my strategy on how I explain the investment to people. Because if you've never opened a business, you don't really get it. It reminds me
Right.
of when we were like 17 and we were supposed to figure out how to pay for college. We're like, IDK, I make $5 an hour. What do you mean it's 30
Yeah.
grand? Like, what?
Yeah.
I've
Yeah.
never seen more than
What's
$100 in my life.
what's loan and
And
debt
so,
service and
yeah, what is federal loan? I don't know. Yes, so I kind of think it's a similar analogy where people are like, I don't know if I can afford a business. I don't know if I can, what is it? So that's, I think, a big thing that I provide perspective on. Now, I'm not a financial professional and I outsource them I refer them to financial professionals that I enjoy working with, and also tell them they're welcome to source their own. But I can give a top level general overview of different strategies to get into franchise ownership. And I'll be transparent with them about their situation. Sometimes they think they're ready to be a brick and mortar franchisee, and frankly, they're not. And other times they could do it. But let's talk about your risk tolerance, because you are at the, a high level of risk based on your net worth. Essentially, the business loan you'll take out will expose the entirety of your net worth.
Sure.
You can do that. Let's talk about that, though. And
what's your risk tolerance here, right?
yeah, do you understand the risk you're taking? And if your net worth is $1 million and your all-in project cost is $250K, even if you're only investing 20% of that, $50K of your own bandwidth, financial, liquidity, your exposure is still an additional $200K on that loan, right? If
Right.
that's only a quarter of your net worth, we're in good shape. If
Yeah.
that's the entirety of your net worth, we got to talk about that. What's your
Right.
risk tolerance?
Of
What
course.
happens if it all goes south? Are you losing your house? If you're 24 and you got nothing to lose, no kids, no mortgage, let's go, baby.
Right.
If you're
Right.
50 and that's your entire 401k and all right, maybe we need to, let's talk about it. I
Sure.
don't talk anyone out of anything because I love a risk taker. If
Yeah.
someone would have tried to, I, when I started this, I had no money. I
Yeah.
maxed out credit cards. I did it all, whatever it took.
Yep.
And I'm so glad I did.
Right.
But I had a high risk tolerance, and
Yeah.
I had a fallback plan moving back into my parents' basement, whatever it took, right? Like, so, everyone's different, and I got to treat this process individually as well as a result of that.
Yeah. Well, that makes a ton of sense. And I think that it's interesting too, because I'm sure you uncover a number of things because from my understanding, each franchisor inside each brand has certain requirements, whatever
Yeah.
that down payment or franchise fee might be. What's the royalty? Do I have to have space? Can I be an absentee owner? I mean, there's probably
Yeah.
so many scenarios that can also help you kind of whittle down what are the opportunities available based on the risk profile, the financial situation, you name it, that can come into play in terms of deciding what the right lane might be for an individual.
Yeah, totally. It's almost like a 1, 2, 3. So there's number one, do you even meet their net worth qualification? If you don't,
Sure.
we could easily I think of it, I look at it as like a funnel. Like, okay, I
Yeah.
toggled those ones off. We're funneling down, right? Like, so if you have a $500,000 net worth, this brand requires $750,000 net worth. We've toggled that brand off. Boom, whoo, look how close we're getting, right?
Yep.
So that's number one. And then number two is, and this is just kind of, I guess it is admittedly like my own ratio, but I think there's probably, I'm sure I learned it somewhere. But like I look at it as a ratio of your net worth to all in project cost.
Yeah.
Again, nobody's funding their all in project costs themselves. I mean, very few people will pay cash for a business, even if they have it, right? So
Yeah.
usually you're using debt servicing, but we still like to look at the all in project costs, whatever you put in and whatever the loan is funding as your exposure. So I look at it as a ratio. So first of all, do you qualify? Okay, so let's say we cross that. Yes, I qualify. Next up, do they require a $500,000 net worth for a $500,000 project cost? So yes, you qualify, but we're at a 1-to-1 ratio of net worth to all in project costs. What's your risk tolerance? Are we comfortable with that? If we're yes, 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 the final step, how are you funding 20% down? Because on average, you're funding now. There are some exceptions to that. So, but if, most of the time you're putting in 20%, just like when you buy a house, right? So, are you funding that with cash? Are you funding that with a 401k rollover, which by the way, there's a great way to start a small business using 401k monies with no tax penalties. It's the only way my family got into our first franchise. So I'm pretty passion forward about that option. But are we using 401k monies? Are we using cash? Are we using a HELOC? Are we borrowing against your invested assets in the form of a securities-based line of credit? And if we're doing those two things, we have to remember that now we got debt and debt. Debt for
Yeah.
the 20% down, debt for the business. It's not that it's a big deal, but we need to factor both of those debt payments into the pro forma to make sure that the business can support not one, but two debt servicing payments monthly.
Right.
So it's kind of a 1, 2, 3 hit when we look at it. So what do you qualify for? What is your risk tolerance? And then where are you coming up with 20%? And sometimes we get past this hurdle, but when we get to this hurdle, it's like, oh, I guess I can't do a $500,000 project. I better make it a $200,000 all-in project because I only have
Sure.
40,000 I really can invest. And so we work down the funnel. And then once we've really gotten to that finish point, then I show the candidate brands that hit that. I don't just go, what do you qualify for?
Right.
What is the brand? Because there's a lot more to it than that. And so we
Yeah.
have to work together. And then sometimes we get down to the bottom of the funnel and it's just not a good fit or the timing's not right. And I've
Yep.
had candidates where I say, hey, that's okay. Let's talk about that and let's make a game plan. Let's reconnect in 12 months, 18 months
Right.
and, get you where you need to be. So, I'll be
Awesome.
transparent about that too.
Yeah. No, that's a great way to look at it. I think it is a funnel. And when it gets down to that last few, you better have a passion for it, to our point earlier of like, you're going to work your butt off. So let's make sure that, if you don't like cleaning houses, then the Molly Maids might not be for you. Right. So it's one of those scenarios. So, well, Anna, this has been awesome. I think you've given the audience so much great information. I'd love to wrap up with any kind of key points or key takeaways in terms of thinking about this franchise lane that would be helpful for individuals that are just getting started. Obviously, we'll have Anna's information. Anna's operating out of one of our mentor locations, and so we're grateful that she's in the Rise system. But if you had some takeaways for potential entrepreneurs thinking about this, what are the first things they should be thinking about, or maybe even putting together, information wise, to help somebody like you find the right solution for them?
Well, I'm so biased. Again, I always admit my bias, but I would highly recommend if you're considering franchising, working with a franchise consultant. And I say that one of the things I love about what I do is my candidates don't pay me anything. We are
Right.
commissioned exclusively by franchisors. So if I show a candidate brands, we work together through it. We find one that's a good fit, they sign a license. The franchisor pays me a commission. So I always say it's not my nonprofit. I am compensated sometimes in this role. But here's the coolest thing. The candidate does not pay any additional fee structure, right?
Right.
So it is a no lose win-win scenario for candidates to work with a third-party consultant. And that third-party consultant is a neutral brand, a neutral advocate for them. We represent hundreds of brands, right? So we don't have to let's say I work for one franchise and I get Pat in my queue, and I love Pat and he's so great and he's so smart and I want him in my system. Even if there are some things where my system probably isn't the best for you or your region, I'm not going to share that. I want you in
Right.
my system. Whereas a third party
Yeah.
consultant might say, Pat, you told me that work life balance was really important to you. This business operates 24/7, 365. Let's actually talk about how that looks in your day to day life.
Yep.
The brand's not going to point that out to you, right? So I I knew very little about the consulting industry before I kind of fell into this, but it's such a no-brainer. So my
Yeah.
opinion, very biased opinion, admittedly, is if you're considering franchising, consider talking to a franchise consultant. It costs you nothing. Obviously, for people that are a good energy fit with me, I would love to work with them. I also recognize, it's about energy fit. I really think it is. So if not me, go look up other consultants. I'm in a network called Fran Choice. It's been around for over 25 years. Phenomenal network. I think of me as kind of like a 1099 of them is the best way to
Sure.
explain it. My business, the Franspot. So we like to use the word Fran. None of us
Yeah.
are very original. But anyway, so it's a cool industry, I think, because it's such an obvious win-win. It's a win for the franchisor. They get great leads and great candidates they may not have gotten otherwise. It's a win for consultants because in theory we got into this because we love franchising. We like to talk
Yep.
this language, and sometimes we get paid. And it's a win for the candidate because they hopefully get a lot more support and advocacy and exposure to opportunities they may not have self-identified that are a better actual fit for them than just going on Google and praying for the best, right? So,
Sure. Right.
so that is my true recommendation: is get some support and advocacy in your process. Why not? And worst case, you learn a lot, and you learn it's not the right fit, or you don't proceed. But yeah, I think it's a great way to dip a toe in the water, even if you're not sure franchising is for you. Even if you're just looking to learn
Sure.
about entrepreneurship, you'll learn about it through the franchise lens.
No, that's wonderful. I think that's great advice. I mean, we were not going to buy a business without hiring a attorney to
Right.
review our docs, right? So on the front end, engage with somebody that is deep in this. I've tried in the past to evaluate franchise brands just on the web, and it can be confusing. So
It
have
is.
somebody that knows what's going on and can really guide you through that process. And even just if you're dipping your toe in, I'm sure you're ready to talk to those folks to see if there is an opportunity. So I think to your point, win-win scenario if you're getting started, know what you're looking for, engage with somebody like Anna, and see if it is the right fit, because it is real money and real risk on the line, but to your
Yeah,
point, can have incredible upside as well.
it sure can. Yeah, if it's for the right people, it's the best.
Awesome. Well, Anna, thank you so much for spending time with us. We'll share Anna's information and look forward to connecting again in the future. I love where you're going, and thank you so much for your time.
Yep, and this is my beautiful Rise office.
There you
Look how
go.
nice it is. Thanks for having me, Pat. I really appreciate it. It was great hanging out with you.
Absolutely. Well, until next time, thank you, audience.